WTI oil is mostly flat after OPEC cut its demand growth forecast for 2024 and 2025. Oil markets remain cautious, weighed down by global oversupply concerns and disappointment over China's recent $1.4 trillion stimulus, which failed to significantly boost crude demand. Deflation fears in China and restrained fiscal action from Beijing have dampened sentiment, with analysts cautioning that China's recovery may provide only limited support for oil demand. Both Brent and WTI futures have dropped over 5% in the last two sessions, reflecting ongoing uncertainty around China's economic outlook. A 4-month high in the US dollar adds additional pressure, as a stronger dollar makes oil more expensive for non-US buyers. This increase is partly driven by investor expectations of pro-energy policies from the recently re-elected Donald Trump, whose stance on domestic drilling could boost US supply. Analysts anticipate expanded production efforts, especially if restrictions on Arctic and Gulf of Mexico drilling are lifted. Such moves could drive US output growth, potentially undermining OPEC efforts to support prices. The nearest support level for WTI oil is located at the $67. A move below this level will push WTI oil towards the next support level at $65. US nat gas futures are sliding back on Tuesday, erasing Monday's relief rally gains as bearish fundamentals reassert pressure on the market. Monday's rally was driven by a weather forecast update that initially boosted demand expectations by adding 10 heating degree days. However, Tuesday's early forecast revisions introduced a more nuanced temperature outlook, tempering the rally's momentum. Mixed conditions are expected. Weather systems moving through the western and northern U.S. may bring rain and snow, potentially supporting some demand, while high pressure over the south is likely to keep temperatures warm, limiting heating needs overall. Despite Tuesday's pullback, colder trending forecasts for late November are providing limited support. Monday's short-covering rally led December 2024 contracts 10% higher as traders covered positions in anticipation of stronger heating demand. Given the bearish fundamentals and uncertainty in weather forecasts, nat gas futures could face a bearish pressure in the near term. While nat gas prices initially climbed on hopes of colder weather, they failed to reach the resistance target at $3 and are now retreating toward the next support level near $2.85. Unless colder weather materializes consistently across forecasts, support around $2.85 may not hold, potentially leading to a price test near $2.75. Overall, I expect prices to consolidate above the 50-day moving average support, likely holding steady until colder weather arrives. Please like, subscribe, and comment to support the channel. See you in the next one.